It actually seems like we're at something of a tipping point. The final major headwind that I was pointing to, sort of keeping Bitcoin down, maybe totally abated. This might have already been the bottom. If Bitcoin manages to go all the way up into the low 70s, that would probably indicate the bear market is over. I don't think we've sort of reached near peak demoralization yet.
Bitcoin is a monetary asset, not changed at all. The economic argument, the technical argument, the decentralization, it's all getting stronger right now. This AI wave that is sucking in a ton of capital, something that I haven't seen in my lifetime.
At some stage, in my mind, you see a rotation out of one and back into the other.
The incentive to get a deal done doesn't make sense for either side. So I think this could go along for a while. I think it's just this chess piece that both Iran and US like to have in play.
If you try to offload your BIP110 coin, if there was a chain split, you could potentially put your Bitcoin at risk.
Most Bitcoin users are not aware. Strategy caught lightning in a bottle. The only thing they need to do is just not mess that up.
That was Joe Consorti and Marty Bent. Joe is one of the fastest rising macro analysts on YouTube, covering the AI trade and where Bitcoin fits into it. Uncle Marty's been in Bitcoin for over a decade and runs the legendary podcast TFTC. The big question we get into is the bottom in. Joe thinks the money that left Bitcoin for AI stocks is about to rotate back, but he still expects one more leg down first, with the bottom around October. Marty's take is that nothing actually broke inside of Bitcoin this time. The selling came from outside the ecosystem, and underneath the price, the tech and the mining are getting stronger, not weaker. We also get into Sailor and what's really going on in strategy, the fight over BIP110, and the ever-encroaching surveillance state that people are finally standing up against. I'm your host, Rob Wallace. Welcome back to the Bitcoin News Channel. Let's get into it. All right, Joe and Marty, thank you so much for joining the show. How are you guys doing today?
Doing great. It's just tending to the garden. Yeah, getting the synapses firing before hopping in here. Ready to go.
Excited. Had to join late. For those of you, obviously, who are at home, the movie magic hides that, but I joined 15 minutes late. Benefits of having a 39-week pregnant wife. But here we are. We're making it work.
We're making it work. We got lots to discuss. We are in what they call the summer doldrums, but there is never a dull moment in Bitcoin. Joe, you've been putting out a lot of great content, and one tidbit that I picked up on was this stat. Since April, gold and Bitcoin ETFs bled out $12 billion. And over that same time window, semiconductor ETFs took in $20 billion. Does this mean that the bottom is in? Has the rotation completed? Has enough juice been squeezed out of Bitcoin and been taken into the AI trade for us to go higher from here?
It's a really good question. It actually seems like we're at something of a tipping point. SpaceX obviously crashed massively yesterday. You had IBM, which is not necessarily as AI related, crash massively today for different reasons. Disappointing earnings report. This is one chart that really struck me, and like the Bitcoiners have partly, and I've myself included, we've sort of been like semi-coping with like, one of the reasons Bitcoin is underperforming is because of the massive AI capital drain. But like just intuitively, it makes sense, right? You've got these massive IPOs. Everybody wants to be allocated pre-IPO and they want to get allocated to the chip names. And so obviously it's going to take a lot of risk capital out of the super boring thing that's already down a little bit. But this sort of shows the picture plain as day. Now, of course, the scales are different for one, and for two, this isn't a direct inflow out of one and outflow into the other. But what it does do is sort of illustrate that at the exact same moment that all this capital has been flowing out of Bitcoin ETFs, and it sort of held up Bitcoin and gold ETFs, and it sort of held up until around May. And then the outflows really started accelerating. At the exact same time that's been happening, you just see semiconductors just ripping faces off, right? To the tune of almost 2x sensitivity here. You see, $12 billion in outflows, $20 billion in inflows, right? So it's massive. This is combining gold and Bitcoin too. So the outflows have been huge. I don't know if the rotation is nearing the I know for a fact that it's nearing the tipping point. Oh, I just say I know for a fact. I don't know anything for a fact. But what I do know is that one trade is extremely overextended. That's not to say there isn't value in these equities. I think there's tremendous value in being allocated to semiconductors, to memory stocks, to other AI names, et cetera, in the long run. But that's not to say we can't get a pullback in the near term, particularly at a moment where we're remaining risk on. Bitcoin is at a 50% discount, right? At some stage, in my mind, you see a rotation out of one and back into the other. And I think it lines up with Q4 when the 4-year cycle is slated to tip, but we'll see.
Yeah, that dreaded Q4 date. And the reason it's dreaded is because it lines up so perfectly with the 4-year cycles of the past. Marty, give us some perspective. You've been in Bitcoin over a decade now. How does this compare to 2018 and the one that we know well, 2022?
2018 and 2022, I think comparatively they were better bear markets from a sentiment perspective. This bear market is more akin to the 2015 bear market in my mind, where the desperation was and the frustration was very high in 2015. People literally thought Bitcoin was going to die in 2015. I don't think anybody's saying that this time around, but I do think the frustration levels are more comparable with 2015 compared to 2018 and 2022. I think 2022 people in 2018 to an extent, 2018 you had like the ICO blow up, and if you were paying attention, and the animal spirits of the fall and winter of 2017 were really focused on inflating the ICO bubbles. And if you understood them from first principles, you knew it was all fake air and it was retail driven. And so when they blew up, it was expected. And in 2022, similarly with FTX and BlockFi and Celsius, like if you understood how those products work, more BlockFi and Celsius, if you understood how their lending products worked, you knew they were susceptible to blowups. And so it was like something BlockFi, Matt and I on Rabbit Hole Recap were calling out for I think over a year before it inevitably blew up. Similarly with Celsius. Then FTX, it wasn't as obvious to people, but I didn't really think SBF was as impressive as people made him out to be. And so when those companies blew up and led to a bear market and the sort of the seeding of the tide of retail investors, it was expected. But I think 2015, it was really like a year and a half after the Mt. Gox blow up, and people were like, why isn't this thing doing anything? And then this time around, like what Joe just said with this rotation, I think this bear market is leading to a lot of frustration because there's not anything sort of internal in the industry that people can point to being like, this is why things are flowing out of the market. I think it's an external factor, which Joe just described, this AI wave that is sucking in a ton of capital, a magnitude of capital that is quite impressive and something that I haven't seen in my lifetime. And so that's how I would describe it. I think it's more akin to 2015, 2018, 2022. Were sort of explainable, looking at the ICO bubble and the Bitcoin lending products and the way they were structured back then. It was obvious they were going to blow up. And so this time around, there's nothing really obvious that is sort of industry specific that people can point to. It's an external factor. And I think that is driving a lot of frustration.
Agreed. People thought that we were supposed to have a glorious end of 2025 into 2026. This, of course, is slotted to be the 4-year turn down here, but there really was no blow up to bring us into this situation. Joe, in one of your latest videos, you were saying that while one more leg down is a cursed term that people always say at the bottom, you do expect for there to be one more leg down, particularly in this Q4, right? In the fall. What could take us down?
For sure, yeah. So I could wind up having a ton of egg on my face here and seem like a moron, which is why I try to hedge myself as best I can when I give these. When I try to be as much of a soothsayer as I can, right? Which nobody ever is accurately in Bitcoin. The reason I point to one more leg down is, and I don't have the chart up in front of me, but for those of you who aren't aware, right, the Bitcoin 4-year cycle, generally speaking, bear markets from a Bitcoin native perspective last anywhere from 10 to 16 months. I believe that's the range. So 10 to 16 months before we go from our cycle high all the way to where we wind up bottoming out for the cycle. That would put Bitcoin bottoming at the earliest, in like early September, or at least beginning to move higher in September. And then at the latest next February. And so like finding a pretty decent middle ground, just pointing and saying that Bitcoin's going to bottom with exactly 1 year in, right around October, November. From a time perspective, it makes sense given what Bitcoin has done historically. However, from a macro perspective, particularly with the news today, which is kind of crazy. I was expecting price inflation to actually come in higher and higher over the next couple of prints, but it came in low. It came in at 3.5%, which is kind of wild. 0.7% decline month over month, the largest month over month decline since April of 2020. Kind of crazy. And I wasn't expecting that. I was expecting it to tick higher over the next at least 2 prints. As the oil shock worked its way through the system, but I suppose it has the immediate oil price has much more of an impact on CPI than I was really discounting. So there you go. CPI fell massively, or didn't. Well, it fell. Disinflation, not deflation. Prices are still rising. They're just rising more slowly. As a result, rate hike odds have come in from about 2.5 to just 1 before the end of the year. And I think you get one more inflation print that sort of disinflated like this prior one, and rate hike odds go to 0. You don't see any rate hikes this year. That was the major macro headwind, right? Like obviously the war in Iran, not ideal. I don't really want to be over there, right? I don't think anybody else who voted for Trump really wants to be over there. It's not ideal. However, from a macro perspective, as far as markets are concerned, really the only thing that mattered was the oil price. And oil prices are down closer to pre-war levels. Sure, they've spiked up now closer to $80, I think, WTI crude futures today, something like that. But they're still right around where they were toward the start of the war. So as long as they stay here, like the macro backdrop will be fine. That the final major headwind that I was pointing to, sort of keeping Bitcoin down, may be totally abated. And so you might see this might have already been the bottom. We may have already bottomed. I tend to not think so. These periods in Bitcoin bear markets, and I think Marty will agree, it's like you get just enough of a move out of it that people think it's over before you violently whip back. Mm-hmm. It's only after people are sort of demoralized to the point where they're like, okay, like Bitcoin is probably going to spend a ton more time here, that we finally move higher. I don't think we've sort of reached like near peak demoralization yet. I think this is another relief rally. That remains to be seen. I could totally be proven wrong. The major macro headwind is out of the way. If Bitcoin manages to close above the, go all the way up into the low 70s and close above the 200-day moving average and hold there and keep moving higher, like that would probably indicate the bear market is over. But I don't think so. I'll believe it when I see it.
Yeah, I think you nailed it right there. The main story of this year has been the Strait of Hormuz, right? But magically, the oil price has not agreed with it, right? People are calling for $150, $200 a barrel of oil, but magically we've been able to keep it under 100 for months. Marty, you've been covering this story closely. What do you think is going on over there? Because it does seem as if hostilities have just lit up once again.
Yeah, I think I'm not going to pretend to be a geopolitical expert, but I think Anash Al-Haji, who's a great oil and gas expert with particular expertise in the Middle East, I think he said pretty consistently over the last few months, like the incentive to get a deal done doesn't make sense for either side. Like Trump can use it as this sort of this card that he has that he can play. There's ceasefires on, ceasefires off, and keep markets on their toes. And then the IRGC, I think they want to project strength. And I think they are, despite the fact that their infrastructure has been sort of decimated to a certain extent. I think being able to show sort of leverage in the Strait of Hormuz and be a force that can really perturb the flow of oil shows that they have some strength. And so I think they like exerting that strength and disrupting things there. But I think if you look at the outcome for the United States, it's actually been good. I think it's been good for our LNG industry. It's been good for our oil and gas industry more broadly. We've done a lot of trade deals with counterparts that has shifted the leverage of oil and gas markets from a geopolitical macroeconomic perspective towards our direction. And so I think this could go along for a while. I don't think it's going to get escalated to a full-fledged like ground war, but I do think it's just this chess piece that both Iran and US like to have in play. And I think it will be in, but like to Joe's point, if you look at WTI, I pulled up the charts at $78.40 right now. I think markets are snuffing that out and saying they're just using this as some sort of headline driver that they can pull out of their back pocket and shift headlines one way or another on a whim. And again, it's not ideal, but it's just what we're dealing with right now.
Well, I agree. I don't think they can escalate at least until after midterms, but they will be playing these cards back and forth over and over again, it seems. Joe, have you been surprised at how they've been able to play the markets like a fiddle? How the Trump administration has been able to keep a cap on oil and make everything hunky-dory despite this great disruption?
It's pretty impressive. I think I heavily underestimated the amount of production increases that the other countries in OPEC could do to offset the gains to WTI. But it only makes sense, right? Like that is all these countries are, to be frank, for the most part, like Iraq, Kuwait, Saudi Arabia. Like the only reason these countries have vast stores of wealth, and obviously all of the other African countries as well, and even countries in South America, like generally speaking, the only reason these countries have any wealth at all, and they're relevant to the geopolitical stage, is because of their vast oil shares. And so, or their oil stores. And so if oil becomes prohibitively expensive, can't really export as much of it. It hurts your country. And so what do? You ramp up production. It's like, this is sort of one of the reasons, in a funny way, like this actually comes back to the value prop of Bitcoin, because Bitcoin does not have a demand response function, right, to price. And so what do I mean by that? Or a supply response function to price. So what do I mean by that? Well, when Bitcoin's price went all the way up to 126, miners couldn't go and say, hey guys, like Bitcoin's super valuable right now. Let's double the block reward. Let's bring the block reward back to the block subsidy back to 50 BTC, right? Let's do that. They couldn't coalesce and do that. And so that's sort of why Bitcoin is so valuable. It's the first major asset in world history to do that, right? It grows more valuable. You cannot create more of it, right? It's the only, I like to joke, Bitcoin is the only absolutely scarce monetary asset. But there are two absolutely scarce assets that you can't get more of if you want more of it, if it grows more valuable. And the only other one is time, right? So in a way, like when we're talking about storing wealth, Bitcoin performs that function better than anything. But regardless, right, to the point of oil, I just really discounted the amount of increased production that these OPEC nations could do. But when you realize that's kind of the reason they are relevant, then it makes a whole lot more sense.
Indeed. This story is far from over, and we are going to see someone needs to win this. I think that this conflict is too important for it to be this murky, they say they won, we say we won, and then we can just leave it as it is. This really does seem as if it's for all the marbles in many ways. If the U.S. can control the North and South America in terms of having all the political actors on our side, the resources on our side, as well as the Middle East in terms of oil, then we can really go to our rivals in terms of China and Russia and say, hey, we've got the energy and the world economies for much of this planet on our side. What are you going to do? In terms of, I know you're not a geopolitical maestro here at Marty, but I know you keep your finger on the pulse. How do you see this playing out in terms of the Dunroe Doctrine, North and South America, energy, and the conflict with China?
Yeah, I mean, that's why I think the Iran situation is perplexing at first, but considering what I said earlier, like it does seem like the leverage in oil and gas markets has shifted our way. It sort of turned the other Gulf states against Iran and more into our arms. And then on top of that, we've got flows coming from the U.S. to new trade counterparts. So like that leverage has shifted more to the Western Hemisphere. And I am a big fan of the national security strategy that was laid forth last year. And I think it does set us up well to compete with China, but I also think it sets China up well to just manage their part of the world. Like that, the strategy that was laid out in the national security document last year was basically like, hey, we've been extending ourselves across the world and meddling in foreign affairs that probably don't make sense for us and aren't in the best interest of American citizens. At the end of the day, we want to shift focus back to the Western Hemisphere, create trading partnerships with our neighbors to the south, in Latin America, which is very resource rich, which there's a ton of emerging market potential in terms of the economies of Latin America, where they are and where they could be if we have solid sort of bilateral trade and investment in those areas. And I think a strong Western Hemisphere where we're really focused on what we're doing domestically within our borders and with our neighbors from a trade perspective, like it just makes sense to me. There's no reason to go out and try to extend the empire in across the Atlantic and in the Pacific. I think focusing on our backyard makes the most sense, and I think peace through trade is the best route. And if we decide that,
How many apps does it take to manage your Bitcoin? One to buy, one to send, one for Lightning, and another for loans. That's a lot of friction. Well, now there's Rhino. Listen to the end, and I'll tell you how they'll set you up with $10 of free Bitcoin. Rhino is a next-generation Bitcoin app that makes living on Bitcoin easy. At Rhino, you can buy Bitcoin with zero fees. Get a Bitcoin-backed loan right in the app. Move cash globally over Bitcoin rails fast and easy. Automate your stacking with a DCA plan, so your stack is growing, whether the market is up, down, or you're touching grass. And it doesn't stop there. Bill pay, debit and credit cards, as well as retirement accounts are all coming soon. At Rhino, your Bitcoin is never rehypothecated. Security comes first, with biometric verification, 24/7 fraud protection, and the ability to move your Bitcoin to self-custody whenever you're ready. Click the link below in the description and download Rhino for iOS or Android. Use code BitcoinNews and Rhino will drop you $10 of free Bitcoin right into your wallet to start you on your stacking journey. Get the most Bitcoin for your dollar with Rhino.
we don't want to be as dependent on China as a trading partner, because we think they've become too much of a they have too much of a strong grasp on our supply chains, and we want to reindustrialize domestically and then help build up the industrial capacity of our neighbors and the ability of our neighbors to sort of mine their resources and trade that way. Like, it makes sense, and I think it's actually a path towards a more peaceful world, where if you're able to concede to China, like, hey, if you want to basically do what you're doing within your borders and have trade partnerships with your neighbors, go for it. We're going to do the same over here. And that doesn't preclude that there won't be opportunities for us to trade together. But I think becoming less dependent on China's manufacturing engine and diversifying supply chains more towards our neck of the woods on the planet Earth makes a lot of sense.
I agree with that. And another part of this grand strategy when it comes to the US is, of course, stablecoins. And a big piece of legislation that is still up in the air is the Clarity Act. We've got a few short weeks left before Congress goes on recess for the summer. And then, of course, midterm season starts, and this will be put on the back burner. So, Joe, you've been keeping close watch of the Clarity Act. How close do you think it is to passing? And how important is it for Bitcoin, if it is in any way?
For sure. So generally speaking, I don't like to look at poly market. I think that because in a way, it's interesting. Like, the more liquidity, generally speaking, means that markets have grown more efficient. But because poly market is now appealing largely toward gamblers, I don't really weigh on prediction markets all that much. However, I do look at prediction markets when it comes to political stuff, because guess what? Politicians love insider trading, and poly market is one of the easiest ways that they can insider trade as of right now. And so, looking at the odds right now, the Clarity Act being signed into law in 2026, they're at like 34%, 35%, 1 in 3. So not ideal. And obviously that's weighing two different things. Number one, the fact that the Democrats are likely to take the midterms, unfortunately. So yet again, the Republicans fumbled just an absolutely generational layup. Like, we have the Supreme Court, we have Congress, we have the House and the Senate, and we did nothing with it. Again, like, congratulations, everybody. Let's pat ourselves on the back. You're about to lose it. The chances are they're going to lose both the House and the Senate, unfortunately. So it's factoring that in, right? Like, obviously there are some Democrats who are on the side of Bitcoin stablecoin legislation, but not nearly as many as the Republican side. So it's weighing that. And the other thing that is weighing is just the fact that this thing keeps going back and forth and back and forth and revised and revised. And it can't seem to, people just can't seem to come to an agreement on what this bill should look like. So yeah, it's unfortunate. I think, as far as an impact on Bitcoin is concerned, like it's sort of something that is can only be positive sum in a way, I suppose, where if we don't get it, it's not going to kill Bitcoin. It's, if anything, it's just like, oh, it's not ideal that we didn't get it passed in the law. But if we do get it, I think it's going to be tremendous. It would be tremendous for fostering even more stablecoin development here stateside, which I particularly enjoy because I love the United States of America and I don't want other countries to beat us at anything. But yeah, that's sort of my my general thinking as to its odds of getting passed. Quite low, unfortunately, but I don't think it's going to be. I don't think it's hugely terrible for Bitcoin.
Marty, I think you've taken the other side of this. You don't really care for the Clarity Act, do you, at this point?
No, as it pertains to Bitcoin, I think the only important sort of provision within the Act is Section 604, which is the names escape me, DRC or
BRCA.
DRCA. And the way that it's written, the last revision that was public, it leaves a loophole that creates a lot of ambiguity and seems to be pretty soft-handed in the protections it gives open source developers. I think when it comes to Bitcoin specific legislation, you're looking at the Clarity Act. That's the only section that matters, and it was pretty weak. If you look at other sections too, they extend the Patriot Act and bring KYC, AML, sort of compliance regulations to wallet software, and I don't think that's a good thing either. I don't think we should be extending the Patriot Act. I think we should be repealing it. And so, yeah, I think from what I'm seeing, it seems like the probability of it getting passed before recess is pretty low. But yeah, I'm a big believer in a no bill is better than a bad bill, and I think this is a bad bill as it pertains to Bitcoin and more specifically developer protections, which I think are very important.
And another legal battle that we are seeing take place within the Bitcoin universe is what Bull Bitcoin is doing over in France. You just interviewed Francis, the founder of Bull Bitcoin, and they are suing the French government over the DAC8 law, which would force their exchange to send all of the transaction data over to the government on a yearly basis, essentially doxing every single Bitcoiner who buys Bitcoin through them. You had a good conversation with him, and you took a deep dive into their legal case. Do you think they can actually win this thing?
Not well versed on the French judicial system, but Francis and his team seem pretty confident that they'll be able to successfully win this lawsuit, and if not, they can push it to the European Supreme Court or whatever the European Supreme Court is. And they're pretty confident that they'll be able to win, basically using France's Privacy Act that exists. And so it seems like a pretty big infringement on the right to individual privacy within France. And I think it's important to note, like DAC8 is being implemented in France first. And so Bull Bitcoin and other exchanges that are at the moment being forced to comply will have to send all that data to the French government by January 31st of 2027. However, it's not confined to the French government. The French government has a data sharing agreement with 27 member states of the EU. So they'll be forced to send that to the French government, and then the French government will share all that data with 27 EU member states. And so thank God that Bull Bitcoin is raising the alarm bell. Now we've got 6 months to figure this out. They're fighting it legally. Hopefully they win. I hope that the confidence with which Francis was speaking about their prospects of winning this lawsuit is legitimate. I like to think that it is. Cypherpunks not only write code, they do stand up for individual freedoms using the judicial system. So I think it's very important to do that, and somebody's got to step up, and luckily Bull Bitcoin is. And I think it's also important to note that this isn't a European specific problem. All this stems from the Financial Action Task Force, their CARF guidelines, and CARF, I think, is Crypto Asset Regulatory Framework. And basically, if you're participating in the Financial Action Task Force, which is pretty much all Western nations and also I think Middle Eastern nations, probably a majority of the world's governments at this point participate in the Financial Action Task Force. And so it's coming to the crypto asset regulatory framework is set to be put in place in the United States in 2029. So it's not confined to France. It's not confined to the EU. It's coming everywhere. And it's an incredible, not incredible, it's an egregious encroachment on civil liberties and privacy for individuals who are interacting with Bitcoin and other cryptocurrencies.
Yeah, let's hope they win, because it does seem as if other governments will adopt it as soon as one major country allows it to go through. And keeping on this subject of privacy and surveillance, Joe, I want to kick this over to you. We've seen the proliferation in America of these flock cameras. And you strike me as a guy who believes in law and order, but you also believe in privacy and the rights to not be surveilled 24/7 by your government. We've seen a lot of these flock cameras be cut down. And it seems as if Americans over the last 25 years have been completely fine with giving up their privacy, whether it's the TSA or online. But now we're actually seeing Americans take physical action against these flock cameras. What's your take on that? And do you think that they are in the right to cut these things down?
Right. So what I'll say to the viewers is that there definitely are not websites where you could find the location of all of the flock cameras in your zip code. And you definitely shouldn't visit those websites or plan on doing anything nefarious to them. Okay, guys, that would be highly illegal. All right. I want to make sure we stay monetized here. I don't get sued by Elizabeth Warren. So I think 80 or like 85 police departments in my home state of Massachusetts have deployed these things. Look, it's so silly. It's completely silly. Like, particularly when you look at the accident data, like the idea of deploying these and like reading the license plate and then getting the VIN number and then storing the vehicle data in a database. Couple things here, like, what good is that going? Like, obviously, people who are speeding, yeah, whatever, sure. Like, that's what they'll tell you it's for. But then, like, beyond that, it uses AI facial recognition as well. It's like it isn't just for speeding cars, is what they say. It's not just for speeding cars. Like, even when we're talking about speeding cars, like an increasing percentage, particularly in Massachusetts, which is wild to think, like the birthplace of the American Revolution, wild to think that an increasing percentage year over year of actual like fatal accidents are caused by people who don't even have driver's licenses. Like, it's quite remarkable. It's like, what are you going to do when someone mows down a family of four crossing the street, but they're a Honduran national, they don't speak any English, and they don't have their license? Like, you're going to bill their insurance, right? So like the real reason behind what's going on is just surveillance. It's disgusting. I do believe in law and order, right? I think that, coming into Bitcoin, I was definitely more of a libertarian. I've morphed slowly but surely more so into just, a standard American Republican. But I do think that this is like completely silly. And to Marty's point, like, this is just the next level of sort of this ethos in the US that began with the Patriot Act, that like, oh my gosh, guys, there could be a threat out there. And so in order to mitigate that threat, we're going to survey you 24/7, right? We're going to have your phone camera on at all times so we could stare at you while you're, in the restroom. It's like safety under the guise of, just mass surveillance state under the guise of safety. This is the next evolution of that. So I personally hate to see it. It's really silly, and definitely don't do anything nefarious to the flock cameras.
I think the other dangerous thing is like it's becoming abundantly clear that they're not as accurate as they claim to be. There's a ton of false positives that are forcing civilians. I saw one woman in Colorado had to the police officer came to arrest her, and she had to, I think she got sent to jail, and she had to get her husband to cross-reference their Ring camera to prove she was at home, and the flock camera misread her license plate. And I think that's another thing. I mean, whether it's flock cameras or chain surveillance companies like Chain Analysis, they present themselves to be these omniscient AI platforms that are 100% accurate, but in reality, they're really not, and they're leading to an increase in, false positives, which are leading to people having to waste time and money to prove their innocence.
I think another funny thing too, Rob, sorry to keep hammering this, but I don't know, did you guys both see the Super Bowl commercial for the the new Ring camera update, the like Find My Dog mode, where it's like, oh, if you lose your dog, Ring camera can connect up with all the other Ring cameras within like a 20-mile radius to create one massive camera to help find your dog. And it's like this was positioned as like a feature for finding lost dogs. But in reality, it's like, like we've all just voluntarily put these things on our doors. Like I've got one, it's super convenient. But now the company behind them is rolling out a feature where they can connect up thousands of them all at once. They can basically create like a mesh map of the United States of America and seeing anybody that's walking down a residential street. So pretty scary.
Yeah, and it feels like the path for the West, and you're really seeing it in places like the UK, is sort of this anarcho-tyranny, right? Where the downtown city centers are just completely lawless, but then they set up flock cameras in the suburbs to make sure that you're not speeding on the way to your daughter's soccer practice, and will show up at your door if they catch you. So it's this dichotomy that really just leads to this unsettling feeling of you're never comfortable anywhere, unless you are a petty criminal.
It's two-tiered policing, but not in the way that the leftists think.
Yeah. Right. Yeah. Okay, let's bring it back to Bitcoin then, and I want to talk about strategy. You've definitely gone to bat for Michael Saylor and his latest tactics, Joe. He has sold 3,588 Bitcoin over the last couple of weeks, and recently just sold another $450 million worth of common shares to shore up this USD cash reserve. And yet the market hasn't really responded. I mean, looking right now STRC is still under $90. Do you still see STRC as the iPhone moment for strategy?
Yeah, so a couple of things, and I appreciate you bringing this up, Rob, because it's a good topic to hit on. I never called STRC the iPhone moment for strategy. However, I have like numerous times gone to bat for them. And during those times, I've also said, and the reason I'm caveating this is important, I don't own any STRC or MSTR. But what I have done is I think I've made 2 or 3 videos, and then also on Twitter, put out quite a few tweets talking about how like basically for a decent amount of time now, and Marty alluded to this at the start when he said like there's really there's almost like no villain per se of this Bitcoin cycle. And so the price is going down, but we don't really have anybody to point to. And so like last month and early this month, the villain du jour was Michael Saylor. And everybody was saying that, his perpetual preferred stock complex was at risk of forced liquidation, and they would be forced into a death spiral wherein they would be forced to sell their Bitcoin and all of this other ridiculous stuff. And so I've sort of come out and said like, hey guys, I don't really own any of this stuff, but it's kind of ridiculous to assert that when the perpetual preferreds are not debt. And the debt that they do have, $6.7 billion worth, I believe. The earliest tranche, just $1 billion of it, is due October 2028 at a 0.625% interest rate. And so $1 billion against their like $55 billion balance sheet. If Bitcoin doesn't do anything between now and then, and they're not able to raise $1 between now and then over the next 27 months, then yeah, they would, sell some Bitcoin. In that case, they would be forced to sell Bitcoin. But really my issue came down to people who were, saying that Saylor was at imminent risk of liquidation and that STRC was the next Terra Luna. And so I sort of went on like a tirade for like 2 or 3 weeks about how all of that was ridiculous. As far as how these things are going to perform in the long run, like we'll have to wait and see. I think that, ultimately I think this is the only sort of the real valid criticism of STRC was that like the way it was marketed, right? Saylor, and I went back to find all of the instances that he did say this. There were 4 separate times where he said either on X, but it was mostly on like major news outlets when he said like, this is money market fund like, which is not good, right? You shouldn't market the preferred that way. That said, ultimately, I think it's going to do fine in the long run. And I think them selling Bitcoin is good, counterintuitively, because ultimately like the major allegation way earlier this year for strategy was that, they were Ponzi adjacent, or that they were effectively a Ponzi scheme. Like CoffeeZilla made this massive video, 1 million views. Like, he did more to advertise these products than perhaps all of us have done combined. But he basically said, like, look, the way that they're raising money to pay these dividends is Ponzi-like. Well, now he's selling Bitcoin to pay the dividends, not as a primary mechanism for paying them yet, but he's selling Bitcoin to pay for them. I think in the long run, that's a great idea, purely because on one side, you've got an asset that has done anywhere from 20 to 35% annually over multi-year timeframes. On the other side, you've got an instrument that is yielding 11.5, now 12%. And so selling a portion of this in order to pay for this, and then raising more of this to buy more of this, that's a legitimate business model. That's just a carry trade being executed at scale. So I think that's good. I think they should keep selling Bitcoin. And that should be their business model, right? Sort of like a Bitcoin transmutation machine, if you will. Instead of just perpetually selling more and more and more and more and more of this equity to buy more and more Bitcoin, and then fund that same equity using more equity sales, sell some of the Bitcoin to pay for it, right? Then you've finally closed that loop, if you will. So yeah, I mean, that's sort of it in my mind. And really the sell-off, as far as I'm concerned, like obviously retail panic, number one, but number two, it's just investors demanding a higher yield. Like as is the case with any product that carries a yield, any fixed income product, price is inversely correlated to yield. Or not inversely correlated to yield, but inverse to yield. And so when the price of it goes down, investors are just demanding a higher yield. So that's basically what happened. Sorry for hogging the mic there for a little bit, but that's sort of my read on the situation. I don't know any of it, but I think they're fine.
Yeah, I think you're right. It was over exaggerated in terms of the calls for the imminent demise of MSTR. They still have $50+ billion worth of Bitcoin, and that can last them a very long time. But to Marty, I want to ask you, in terms of the heroes and villains that you've seen in Bitcoin over the last decade plus you've been in it, I mean, like slay your heroes is a constant term within Bitcoin. Where do you see Saylor on his character arc within the Bitcoin community at the present moment?
I think I don't want to consider him a villain. I don't think he'll ever be a villain. I think Michael Saylor is an overwhelming net positive for Bitcoin. Strategy is as well. I think they do need to button up some things. I think Joe mentioned the marketing like a money market like fund is not ideal, not what they should be doing. They should be not more transparent. They're very transparent, but more accurate in their marketing. Then on top of that, I've said this many times in the last month, is I think strategy caught lightning in a bottle. They beat everybody to the race for corporate Bitcoin treasury adoption. I find it hard to believe that anybody's going to catch up to them. And they're the only thing they need to do is just not mess that up. And I think over the last year, specifically, this started last year, after their Q2 earnings call, they gave some forward guidance on how they were going to tap the ATM and sort of the guardrails they were going to put on themselves in terms of issuing equity to raise cash to buy Bitcoin. And they negged on that forward guidance within 2 weeks. And I think similarly with some of the preferreds, they've done similar things, giving forward guidance and then actually not following through with that. And I think that's what they need to button up. And I think they've tried to do that in the last few weeks. They've released that framework, the balance sheet framework of how they're going to raise capital. And I think that's all they need to do is stick to that. It's like, if you're going to say, here's how we're going to hit the ATM, here's how we're going to acquire Bitcoin, here's how we're going to issue these preferreds, here's how we're going to pay the dividends on those preferreds. And as long as they say they're going to do something and stick to it, I think they're going to be fine. I think that's what's gotten them in the most trouble over the last year is saying they're going to do something and then doing something else. But I think they have plenty of time to right the ship. And I don't think Michael Saylor is a villain. Similar to Joe, I don't own any MSTR or Stretch or anything. People are going to utilize Bitcoin in the way they see fit. And Michael Saylor and Strategy are doing it their way. And all the better to them for doing it. I don't think they're going to death spiral. I don't think they're going to go bankrupt. I don't think they're a Ponzi. But I do think they just need to really right the ship and button up their forward guidance and just stick to it.
There's definitely an activity bias over there, right? Constantly creating new things, innovating. And I agree that in business, you have to be constantly trying out new stuff or else you stagnate and die. But at the same time, in Bitcoin, patience is rewarded. And sometimes you just have to sit on your hands and be willing to wait out some tough periods. Do you think that they're going to continue to make more and more complex financial products, Joe? Or is this the state in which they can finally chill out and reap the gains of all the Bitcoin, the 850,000 Bitcoin that they've purchased so far?
For sure. It's a good question. I mean, I think they should retire the other preferreds, just simplify the whole thing, right? I think they should retire everything except for STRC. Clearly, there's some demand for them, but I think just simplifying it, simplifying their messaging, explicitly stating that, like, hey, we've shifted from the buy Bitcoin, then do nothing with it entity, and then sell stock and buy more Bitcoin, do nothing with it entity, into someone who is actively managing this capital and effectively becoming like a publicly traded Bitcoin hedge fund with a fixed income product, if you want to reap some of the rewards of that. I think like pivoting to that messaging, retiring the other preferreds, except for the one that they have in Europe. I think that's probably the best move rather than trying to get more complex, like simplifying it, being more honest. Like as Marty said, they're crazy transparent. I don't know any other public company where their lander, not just like a page on their website, but their lander is literally their balance sheet. I don't know of another company that does that. But being more forward, being more direct, simplifying the capital structure, I think that's sort of the move going forward. But then again, I'm just some dude, in a home office. I don't run a multi-billion-dollar company. So we'll see what happens.
Yes, just like all of us here. So one thing that Saylor did come out recently and talk about is BIP 110. And he took a position of opposition. Joe, you made a video recently where you did state that you believe that Bitcoin should be primarily a monetary asset. And I think that all three of us here on this call agree with that. But you did get some pushback as well for that video. Can you talk to us about your experience putting out your stance on BIP 110?
Yeah, pushback is one way of saying it. Like all of Twitter, like I felt like all of Twitter lit up for a day, and I was like main enemy number one. It's funny. I'd like when I have video ideas, I email myself. Like my email is just all to myself because I'm like out and about. And I was thinking like, hey, wait a second. Like I've only been making Bitcoin and macro commentary. Like maybe I should try making a video about the protocol itself and like what's happening over there. Like the one time I do it, I get completely speared. So never making a video about the protocol again. I'll leave that to you guys. But yeah, look, I think, when I made that video, basically the way that I wrapped it, and I try to be as balanced as possible, is that spam isn't an issue on Bitcoin right now. Like very clearly, it doesn't appear to be a major issue where like, oh my gosh, I can't send this transaction. It's prohibitively expensive because people are, doing monkey JPEGs or whatever. But I think that like, it's valid to want to come together and arrive at an actual consensus for what we should do about this in the long run, if at all. There's one school of thought that says, look, like as Bitcoin continues monetizing, it will grow so valuable that anybody looking to do a non-monetary transaction is just going to be like, they're just going to lose a ton of money. It's going to be the dumbest thing ever, right? So like there is an argument to be made that like doing nothing is the best because over time, Bitcoin, as it grows to a 10 trillion, 20 trillion, 50 trillion, $100 trillion asset, like doing a NFT on Bitcoin doesn't make any sense, And so like, but then there's another camp that says, look, we should come together and try to figure out a change we can make to the protocol itself in order to make it so that it explicitly prohibits non-monetary transactions. So I basically I like the idea of BIP 110. I like the idea, like in principle, I like the idea of creating something that can make it so Bitcoin can only be used as a monetary network. But that said, like number one, spam isn't an issue right now. And number two, over time, like just as Bitcoin has throughout its history, like the market will arrive at the solution it feels is the most valuable for Bitcoin in that moment. And it very well might be doing nothing because it will be prohibitively expensive to do non-monetary transactions in the future. So we'll have to wait and see. But moral of the story, I'm never making a Bitcoin protocol video again. Anyway.
I felt for you, dude. I felt for you. Absolutely. And Marty, from a technical aspect, when it comes to BIP 110, what are the odds you put on an actual chain split?
I mean, it depends. I think they could be high, but I think the minority chain will have such low hash rate that the chain with the heaviest weight won't barely even notice it. So I think there certainly will be like a chain that forks off, but it will have a very small amount of hash rate, and you'll be able to build on that chain with that hash rate, but I don't think it'll be recognized as Bitcoin.
And one thing that NVK brought up in my recent discussion with him is that at this moment, there's no replay protection when it comes to this potential chain split, which means that if you try to offload your BIP110 coin, if there was a chain split, you could potentially put your Bitcoin at risk. Could you explain that a little bit more?
Yeah, now we're having flashbacks to the block size wars, and this is something I haven't studied in a while. But yeah, I think that's not ideal, and I think it is irresponsible to not have replay protection. I think if you are engaging in a gentleman's sort of debate or a gentleman's agreement, like, hey, we're going to see what the consensus is to what Bitcoin actually is, you should play fair, or not play fair, but have the interest of Bitcoin users, the best interest of Bitcoin users in mind. And I think having replay protection is a low-hanging fruit protection that you can give those users. And if we're being honest, most Bitcoin users are not aware of the sort of technical intricacies and nuances of all these things. And so without replay protection, you do open up the possibility of somebody thinking that they're doing something in their best interest and basically making an economic statement, and it comes back to bite them in the ass because there's no replay protection. So I think it's irresponsible. The whole BIP110 saga, similar to Joe, I've tried to stay out of it. I did Bitcoin plus live desk. I think I did 2 days of like 8 hours straight when they were doing it was Bitcoin plus on mining pools, and they were talking about op return. And so I had individuals from both sides come through the desk for many hours throughout both days. And I think on that day, I decided it's very obvious to me that both sides are not going to agree on this. And it's just not in the best interest to get in the trenches of trying to make an argument one way or another, because you're like both sides it's just like speaking to a wall. You're not going to convince the other side. The only way that this will be resolved is if they try to launch BIP110 and fork off, or who knows, maybe they do have consensus and they will become the dominant chain. I don't think that's the case, but I won't say it's out of the realm of possibility. I think it's very low probability, but I think the best way to resolve this is just to see you on the field, run the software, see who downloads it and adopts it, and how much economic value flows through that implementation. And I think that's the only way to resolve this issue at this point.
Yeah, I think that's one benefit out of all this is that we all get a little bit smarter, right? We talk about the intricacies of Bitcoin and node running and different potentials of what could happen in case of things like a chain split without replay protection. So yes, there's much to learn, and it's through this real world implementations that it comes to a head, and you're forced to learn. But in conclusion, I want to leave on a lighter note. Let's talk about what we're excited about. Joe, you're deep down in the macro every single day, and there's plenty of things to be worried about in terms of global economy and maybe even Bitcoin. But what gets you excited about looking forward in terms of Bitcoin and the larger picture?
Yeah, so I mean, I'm just excited for Bitcoin to finally find its bottom. It's really exhilarating. I mean, whether it's sooner than later as a result of the composition of Bitcoin's market structure being fundamentally different this time around, and that it's more ETFs than ever. And also it seems like the macro backdrop is turning in our favor sooner than I expected. Or whether, we just do what Bitcoin has always done. We wait until Q4 / early Q1, and it's like the 4-year cycle lives to die another day, and we begin moving higher. But one thing is absolutely certain, and that's like they can't stop printing money. Like a lot of people will ask me, they ask you guys, like, what could kill Bitcoin? And my answer invariably is, well, if like we had an austere government that stopped printing money out of thin air and borrowing up to our eyeballs at an increasing amount every single year, like that would probably kill Bitcoin. Like the value proposition for a store of value wouldn't really be there from a store of value perspective, wouldn't really be there if you could effectively store value in the dollar. But you can't. So Bitcoin's going up forever. So really, to me, it's just a question of like, when is this going to go up and how high? And I tend to think that that's sooner than later.
Bada bing. How about you, Marty? What are you excited about?
Similar. I mean, the fundamental value prop of Bitcoin as a monetary asset has not changed at all. In fact, it's gotten stronger. I mean, if you look at the fiscal side of things, this year alone, I mean, just with the tariff refunds that we had to give, I think I saw that we actually had to give back more dollars that we collected in tariffs by a significant amount than we actually took in. And so you have that sort of fiscal, I don't know if it's a black swan, but sort of that tapped onto the fiscal tab this year. If you look at the interest expense on the debt, it's only rising. We're going to pass $40 trillion in national debt later this year in a few months. And that seems to be accelerating. And then on the technical side, like I think the ability to use Bitcoin as everyday money, to secure it, to leverage Bitcoin in a truly cypherpunk way where you're getting very good privacy, very seamless usability from a payments perspective, like all that has been getting significantly better in the bear market. I mean, the combination of Lightning, Arc, Spark, eCash, Liquid, that culmination of those interoperable second layer technologies is, I think, getting to a point where we could see some breakthrough on a UX perspective on the second layer and on the payment side. And then even on, like, you see like Arcade talking about bringing covenants to their Arc protocol. And I think you can get really interesting with use cases there. And then on top of that, I think mining is being pushed off the grid. And I think that's actually, many people are saying, oh, mega miners are transitioning to AI compute. That's bad for Bitcoin. I think it's actually good. I mean, not investment advice, but Bitcoin mining is a game of capital allocation, and you really need to focus on when you acquire the ASICs, and ASICs are on fire sale right now. And I think if you were looking to sort of time the capital allocation of mining, it's a great time to get in. And I think the nature of the mad dash for electricity for AI compute is such that the Bitcoin miners are going to be forced to find sort of off-grid, smaller operations, which should be good for geographic and ownership distribution of hash rate. I think some hash rate will find its way out of the United States, which isn't a bad thing. And yeah, I think, again, whether it's the economic argument, the technical argument, the decentralization, it's all getting stronger right now.
And that's what people don't see while price is not going up, right? These stories are all highlighted when everybody's talking euphoria. But right now, it's a time for building and for laying the foundation for when the world realizes, oh, wow, we all really need some Bitcoin. Gentlemen, thank you so much for joining us. This was a really fun conversation. If people want to find out more about what you guys are doing and building, where should they go? Take it away, Joe.
Yeah, for sure. Well, thanks a lot for having me. And thank you guys for waiting for me. Like, that was the most disrespectful thing ever. I apologize. But if this is a collaboration, you guys want to see more of my videos, just click right there, click Joe Consorti, check it out. Or you can just click up there in the search bar, type Joe Consorti.
Boom.
Yeah. And if we're collaborating, you can hit TFTC too. TFTC.io is our website. If you want to check out all the content, the newsletters, you can sign up there and then hang out on X at Marty Bent.
These YouTube collabs, man, they're so cool. They're so powerful. Let's get it. All right, boys. Thank you so much for joining me. And I'll talk to you guys soon.
Thanks, Rob.
Thank you so much for making it all the way to the end. If you enjoyed this interview, be sure to give it a like, subscribe to the channel, turn on notifications, and share it with somebody who you think would enjoy it. If you want to dive even deeper, be sure to check out our interview that we just did with NVK, the founder of CoinKite and the maker of Coldcard, one of the best Bitcoin hardware wallets in existence. We get into his background, why he thinks there's only a few years left for people to own real Bitcoin UTXOs, and where he thinks AI is taking us. That was a heck of a conversation. I really hope you go check it out. I'll see you over there.